Good afternoon, good morning, good evening. It is the 4th of February, 2021, 12:23 p.m. Eastern Standard Time. Happy Wednesday, or rather Thursday, everyone. We talked about the euro yen yesterday a little bit, and I talked about how there's a pretty massive drive south that this is setting up for. So let's just take a little quick review here because it looks like we're getting that set up today. I want to take a look at the intraday here for a second. But if you look at this pattern here, this triangle that's pointing upwards, that's known as a rising wedge. Rising wedge patterns are very, very bearish by their very nature. In fact, this is actually in my own trading. Whenever I look for a pattern, as far as a geometrical pattern, whether it's a flag or a pennant, a rectangle or a triangle, I really only look for rising wedges and falling wedges because they are the epitome of excess. And from a technical perspective, we like to see these because they tend to have very fast, in this case, a very fast collapse. I'm going to put the Ichimoku system back on here. We've been trading lower throughout the day. If we look back at the 29th of January is where we had this last high. We've been pushing down south now ever since then, and we're continuing to respect the hourly Kijun-sen, which is the red average. We're continuing to respect that as a source of resistance, and we're getting closer and closer and closer to the bottom here. Now, this trend line that's currently showing up as part of this triangle, that is not the actual trend line that we would be looking at. If we wanted to get a more authentic look at what the trend line would be, we can certainly do that. I did have someone ask about that. We can actually just go back from here. In this case, it's good to use the wicks and it's good to use the bodies. This is letting us know that we're kind of below that, but we have this low here that I drew off of, and then from that low, but also I want to know from the bottom of that candle to the bottom of this candle. It's pretty parallel. I mean, it's not 100% parallel, but it looks very parallel. So we're getting right to this point here of where we would see prices collapse south. Let's take a look at the oscillators here on the daily chart. We can see that the RSI has found resistance up against 60. It's continuing to push down. And again, this part right here that I talked about yesterday on the composite index, how it's crossed below both of its averages, that is an inherently bearish event, especially when we look at all the consolidation that's occurred. This is really pointing to the direction that we are very, very, very likely to go. It's not 100%. Nothing in technical analysis and in the markets is 100%. Well, I take that back. The markets always move to the right. So that's the direction we know that they always go. Until they stop trading or there's a zombie apocalypse part 4, this will keep going to the right. But for the euro yen, we are really getting close to that. And when you approach these kinds of levels, I don't know if we'll get down here by tomorrow. That'd be a pretty sizable drop over between now and the end of the day Friday. How big of a drop would that be percentage-wise? We'd be looking at, from where we're currently at. Oh, no, that's totally doable. You're only looking at a 0.5% lower, 0.43 to 0.5% lower. This is the kind of setup that you could easily see create a gap down over the weekend. And this is entirely how this would play out too. This is 15 years of seeing this. This isn't my first rodeo. You see it gap down, flash crash down to here, the bottom of the cloud, the single span B, and then what you get is some pausing, and then you get this massive rally higher, sucking in a whole lot of buyers, maybe even extend back up a little bit, and then you finally do get this massive collapse south. We did use the volume profile to help determine, price levels that we would see it fall down to. And we're still looking at that. From where we're at, it's about a 540 pip drop. I know that sounds really crazy, but it's really not. That is a very doable move. It's well within the normal range that you would look at on a weekly chart and a daily chart for a swing trade. It's very likely. Let's look at some of the other euro pairs. So looking at the euro dollar, that one is continuing to fall here. We are down 73 pips, 0.61%. And it doesn't look like we're going to stop until we get down to 118.32. That is the next major support zone volume-wise. Does that line up with a Fibonacci extension? That's what I want to know. Fibonacci extension. Bam. Bam, bam. It's the 1, 2, 3, 6. I wonder if that changes at all if I take it off the logarithmic scale. No, pretty much the same. All right, yeah, 1, 2, 3, 6 Fibonacci level. That's where I would expect to find it. I mean, the weekly chart, that is a relatively wide open space on the weekly chart. Yeah, wow, the euro dollar is down 176 pips on the weekly chart so far. It's just really been consistent pressure to the downside all week. It's one of those things where you get lost and kind of get lost in the day-to-day. You sometimes forget to notice that this is a this is a very bearish candle. I mean, the high of the week is 121.37. The open is the high of the week. That's crazy. The open is the high of the week, and the low is at 119.60, and we are 9 pipettes above that. So yeah, now we just created a new low as we're talking about this. So yeah, we're seeing this the euro weakness continue. Expect to see that be reflected across the board. The euro yen, look at that one too, continue to face some pressure to the south. Looking at the other euro pairs here, euro Aussie. Beautiful bear flag set up for continuation move to the south. Euro Swiss might face a lot of sideways pressure, but otherwise the euro yen, that's the trade I'm looking at. Looking for this one to really play out nicely over the next week to 2 weeks. And yeah, we'll kind of go from there. From all of us here at Exchange Rates UK TV, thank you for watching. Please don't forget to like and subscribe, and I look forward to speaking with you in our future videos.